Hey, I'm downtown Josh Brown here as always with Michael Batnick. We're here to play What Are Your Thoughts? I don't know what Michael's going to ask me. He doesn't know what I'm going to ask him. Stick around. Okay, Mike, my first topic, this has been on my mind for a while, and I think it's on everyone's mind. Doesn't it seem like the consensus now believes negative interest rates in the United States is inevitable? Like, it might take a long time before we get there, but it's going to happen.
Yes.
Do you feel that way?
Yes, I do.
Like, if you know that that's about to happen, what do you do?
Well, you don't know.
If you feel it's inevitable, what are the things that you would do? I'm not saying like as a hedge fund. I'm saying like as just a regular person who maybe has some investments, maybe has some money saved. Like, what if you feel in your bones it's going to happen?
Which rates?
Let's say all the way out to a 10-year treasury, getting to zero, and everything with a shorter maturity being negative.
Buy bonds.
Which I think is like where most of the developed world is now.
So if you knew that was going to happen, obviously you would want to know where the curve is going. But I tweeted the other day that zero coupon bond ETF is up 37% year to date.
Say that again.
37%. The zero coupon bond ETF is up.
Which is pure rate.
All duration, up 37% year to date.
Right.
But wouldn't it be funny if, like, for no reason, without any warning, because there never is any warning, what if rates just start going higher?
Well, I read Peter Bookvar, and he did this amazing thing. I think he did it this morning. He was quoting all of the central bank people from Japan and Europe who are now saying, in a way they've never said, that's it, no more. It doesn't work. We're not cutting 10 more basis points into negative territory. Like, there are now people who have been driving this whole experiment who are saying, forget it, it's not working, we're not doing it. And I don't think the bond market looks like it's prepared for something like that, where all of a sudden there's this abrupt reversal of course.
Wouldn't that be great if rates start rising too fast?
It wouldn't be great for the stock market.
It would be great for comedy.
It would be great for comedy. I agree.
All right.
What do you got?
So how about this IPO market?
How about it?
Uber, Lyft, Slack.
When's Airbnb coming?
And now they're talking about WeWork maybe cutting the valuation in half before the IPO. Just bombs everywhere. And the market has digested it. Like the overall market.
Yeah, so this, like, to me, this is the gray lining of a silver cloud, meaning it's been really great to have capital formation. Unfortunately, it hasn't taken place in the public markets, so it's been very concentrated amongst the uber wealthy venture capitalists and the pension funds that have a VC sleeve. And the negative now is that these companies come public at such high valuations that it's almost like they can't make anyone money.
But imagine, so people are talking about this potentially being the canary in the coal mine, like watch the IPO market, how it handles these. What if these companies get wrecked and there's no see-through, no broader impact on the overall market?
So we've had previous generations of IPO waves where the companies have gotten wrecked and then recovered. Like, I don't think Salesforce.com was a hot stock out of the gates. Facebook got cut in half and then subsequently quadrupled. Google never went down from the IPO. Amazon, we know the story there. I don't think Netflix was a huge winner in 03 or 04 when it came out. So I don't know that the failure of these IPOs to sustain a pop is a canary in the coal mine. A bigger canary in the coal mine to me would be if we just start seeing 2-3 deals a week. Because my own personal experience, I'm biased by 1999 was my second year in the industry. And I just remember there being an IPO in the morning and then an IPO in the afternoon. And to your point, it got to the point where there was no one left to buy because everyone was stuffed to the gills with IPOs. So, yeah, that would be the canary in the coal mine. Maybe not these big marquee name deals that everyone has known for a long time would eventually come. I want to ask you about Ben's post, Everybody Wins. I found this fascinating. So Ben was saying long-term bonds gave you about 23% this year, which is amazing. 18% on the S&P 500. That's year-to-date total return. And then another 18% for gold. He was saying in the last 100 years, that's only happened once, 1986. Not that there's any significance of that year. But do you think the big takeaway, or what do you think? I'll tell you what I think, but what do you think the big takeaway from something like this that's completely unprecedented happening out of nowhere?
Well, wasn't 2018 unprecedented in the sense that I think Deutsche Bank had a piece where like 96% of asset classes went down?
Yes.
So,
that was the year everyone lost.
Right.
This is the year that almost everyone wins. But what's the takeaway for an investor who lives through a year like this?
Well, can I segue to my next question? Because it dovetails nicely with this one.
Let's combine.
Before today, so I wrote this question yesterday. In terms of like the idea that everybody's winning, it doesn't feel that way. At least I'm using like anecdotal data from Twitter.
Because
and
we're talking about recession all day.
But so, doesn't it feel like we had like a washout in sentiment with the S&P 500 up 15% year to date? Like were we even recently 6% off the highs? And it just feels like super bearish everywhere.
All right, so that's
so like what's going on?
That's a good point. So I guess a lot of it is the Russell 2000 is very far away from a high and hadn't made a new one. So there's a lot of individual stocks that are, I'm not going to say they're in individual bear markets, but they don't feel like they're in bull markets. Is that fair?
Yes.
Okay. I also think the narrowness of what's worked, even though the averages have gone up a lot.
But what do you mean the narrowness? It's not being led by the FANG names.
If you have a diversified portfolio and you own blue chip companies, and the companies that you own look like, let's say, Bank of America and Berkshire Hathaway and Pfizer, and like I can reel off a whole list.
Wait, Bank of America is a blue chip stock? What year is this?
I mean, Dow stocks, let's just say. I don't know. I feel like people that aren't in the right stocks this year more than usual have no reason to be bullish. I don't know. You don't get that sense?
I mean, it's always a mixed market, though. This year is not like unusual in terms of dispersion of returns at all. But I'm just saying, like
2017 was not a mixed market. Literally everything went up. So this is very different than that. I don't know. That's where I'm at with that. Ezekiel Elliott got his deal. I wanted to ask you.
Oh, you're so wrong.
What do you mean?
Your take last night on Twitter was an abomination.
Well, that's what I want to ask you about. I feel really strongly about it, and I know you hate my sports takes. So I want yours.
Okay.
Why is it such a no-brainer to make Matthew Stafford, who sucks, the highest paid player in the league?
You mean
hold on,
Jared Goff?
No. Matthew Stafford 2 years ago, and then they did it last year with Carson Wentz, and then this year it's Jared. Every quarterback that comes up,
here's why. Stop.
Becomes the biggest contract ever.
Here's why.
Why is that such a no-brainer?
Because
these running backs are treated.
When your quarterback goes down, your season is over. That's why.
It's a lie.
It's not a lie.
It's a lie. Who was the quarterback for the Eagles in the Super Bowl? You're lying.
That is literally one piece of data. One. That is the biggest outlier.
I watched Trent Dilfer beat the Giants. Come on.
He was the starting quarterback for the entire season. He's a shitty quarterback. Quarterbacks are not replaceable. If your quarterback goes down, you are done. Your season is over. Todd Gurley sucked last year, and C.J. Anderson stepped in and was fine. He was out of the league. Running backs are totally replaceable. If you have a decent line, the running back can run.
Can you remind me of the circumstances in which Tom Brady became the starting quarterback for the New England Patriots?
You're picking random shit.
It's not random shit. It's literally what happened.
He's the best quarterback ever. That happened once.
Okay.
Quarterbacks are not replaceable. If your quarterback goes down, you're done. Running backs are replaceable.
Okay. So Jared Goff, that monster contract is a no-brainer, but Ezekiel Elliott has to go almost into week 1 before they finally give him the money they knew they would give him anyway.
When is the last time a running back led a team to a Super Bowl?
When is the last time you could just have a great
just
quarterback
stop.
and no
Nonsense,
running back?
Nonsense. And actually, this also dovetails nicely with my next question. So I was watching NFL TV the other night, and I think they had a stat something like...
Wait, so we're not going to agree on that?
And we're not going to agree on this either.
Okay.
We had a debate last year about which sport can you turn around the franchise quicker, football or basketball.
We did have that debate.
We did.
And we disagreed.
Wait,
what did I say?
You said the NBA.
Yeah, I still think that.
No, you're still wrong. So, on average, there are 6 new teams in the playoffs every year in the NFL. Explain that. You can't. Next question.
Parity.
That's my point.
What is your point? That NFL teams have more parity when they start the season
that
is not.
In any given offseason, one of the reasons why football's so great is because you feel like your team could have a shot to turn it around.
Let me ask you a question. If Kyrie and KD made the same exact deal they made with the Nets with the Knicks, do you think in 2 years they would be like a contender in the East when KD comes back? So
the NBA has changed a lot in the last time that we spoke, but I think I'm still right.
All right.
Next question.
All right, I'll let you have it. This is my last one. There was a little bit of a mini controversy while we were off where I'm not going to get into names. One of the robo-advisors who had been touting this high rate on cash balances, like they were screaming, we're paying the highest rate on cash. They obviously had to drop it because in July there was a Fed rate cut and it no longer was economical. And I think there's actually a rule that banks can't pay an interest rate on savings where they automatically lose money. Don't you feel like moving your money, chasing a rate on cash balances is just as dumb and bad for you as chasing a rate of return on a mutual fund or chasing performance in any other kind of investment?
Do you think people really do that, though?
I think there's probably a very small group of people that do it because no one ever told them you're wasting your time.
I mean, yeah, you might make an extra $30 for the year.
Well, actually, so let me answer your question with a question. You're saying, do I think people do it? If people didn't do it, then why would all these companies be advertising their rates?
Maybe they're trying to
teaser rates.
Maybe they're trying to take cash off the sidelines. There's $9 trillion in savings accounts. No, you stop.
The sidelines.
There's
out of mattresses. It's already somewhere.
There's $9 trillion in savings accounts earning zero.
Is that right?
I hope I didn't just make that up. I think that's right.
That's an insane amount of money.
Yeah.
Okay. All right. What do you got?
Last question. We're in a good period for TV shows, I think.
TV shows.
Yeah.
Sometimes. Some of them.
What's your favorite right now?
Succession. That's on the air at this minute?
Yeah.
Succession.
Same.
But you know what else I watched this summer that just ended is City on a Hill, which I think is neck and neck for being one of the best.
Is that Bacon?
It's Kevin Bacon playing Dennis Leary, who's playing a cop, is the best way I could put it, and it is magnificent. It's really, really well written. It's smart. It's not like you're watching another Law and Order. He's a cop, but he's...
Speaking of Law and Order, Robin likes that show.
So do I. I fell asleep to SVU.
If you close your eyes, it literally sounds like they're reading. It's the worst acting of all time.
Yeah, because they have to make 500 of them.
Yeah.
TNT is not going to, run itself. They got to fill these channels. All right, that's all I got. Let us know what your thoughts are on this topic and how bad Mike's running back take is. We love your feedback. We love your likes. We love your subscribes. We will be back very soon.